Hello everyone, my name is Sam Newton. I am the co-founder of Gravitate Accounting. So we are an accounting practice based in Sheffield. We are about 30 staff now, and yeah, our business model is set up to collaborate with clients. So we work hands-on with a smaller number of clients. Automate their finance function is a big thing for us, and optimize our tax position. That's how we like to work with our clients. And I suppose we're here today because of salary sacrifice. We have a salary sacrifice calculator, and it's telling us that the increase to us is going to be around 18 grand a year. But if we can get all our staff signed up to salary sacrifice, we can reduce that impact by about 22%, 4K. So we are keen to do that, and we are here with Penfold. So we always say we practice what we preach. Penfold are our pension provider. We switched to Penfold because of the tech. I see Penfold as almost like a banking app, where when the staff contribute to their pension, they get a top up in their pension and they can physically see it. And that's why we love partnering with Penfold. And we've got Maria here. She's a specialist in all things salary sacrifice, and she can introduce herself. Absolutely. I've got some background noise there. It's fine. I think I can mute the person. So yeah, if you over to you, Maria.
Okay, thank you for joining, everybody, and just let me introduce myself. So obviously my name's Maria. I work for Penfold Pensions, and I work closely with Sam and his team as their account manager. And really our goal and my role is to ensure that Gravitate are happy with using Penfold and obviously all of their clients. So today what we wanted to do is talk about salary sacrifice and explain why it's a smart way to actually reduce the employer's cost. So what we're going to do, today's agenda will be salary sacrifice, explaining the pros, the cons, the benefits for employers and employees, how we implement salary sacrifice, and then I'm going to talk a bit about the background of Penfold, our funds we use, and how you switch over to Penfold and salary sacrifice. And then obviously what's next after the presentation. And then at the end, I'm happy to answer any questions. But also, if anyone's got any questions throughout, please don't hesitate just to put your hands up or shout, and me and Sam obviously can help.
Yeah, I just say on the questions, if you try and type them in, that might be easier, just in case. Obviously, we don't want people shouting on the mics and having background noise and stuff like that. Just be easier if that's okay.
Yeah, no problem. Right, okay, so salary sacrifice, why has it become so popular at the moment? Because salary sacrifice has been around for decades, it's nothing new. But obviously from October last year, the government announced the increases in the employer national insurance, which is quite a huge increase. Here is just showing you some of the headlines from the papers when that was announced, just talking about how much this rise is going to hit employers with their costs, etc. So yes, so what happened with the increase, which I'm sure you know, it does start on April the 6th. So I think it's, 30 odd days till it actually comes into to play. And what will happen is the percentage will go up from 13.8% up to 15%, and then obviously it's also going dropping down the level from 9,000 to down to 5,000. So what is salary sacrifice? As I said earlier, salary sacrifice has been around for decades. It isn't anything new, and this is basically where the employees, who are at the moment paying 5% of their pension out of their gross salary, they sacrifice that 5%. So on paper, their salary does look lower, but only on paper, because the employer pays in the 5% that they're normally paying in, that they have sacrificed, and then also carries on paying in the 3%. And the benefits for this is because it helps the employee It reduces their national insurance and a bit of tax. It's not such a lot for the employee, which you'll see in a minute when we go through some figures, but for the employer, it's a higher saving for the employer, and obviously that's every employee. So if you've got lots of employees, it's however much you're saving per year times however many. So it really does help, especially at the moment, because I think nearly every company is having to look at ways to find this extra cost that they've got to start paying from the 6th of April. So with salary sacrifice, just to give you a bit of example here, that if you was an employer with 10 employees on an average of £35,000 salary per employee, the national insurance increase would cost that company £3,800 a year. But if you switch over to a salary sacrifice scheme, yeah, and that's, as I say, no one's disadvantaged. The employees are actually gaining a bit of extra money, cash in their pocket. They still have the same amount going into their pension pot, but also the employer saves on employer national insurance. That national insurance increase for a company with this many employees, instead of costing 3,800, it will only cost 1,100. So it's just helping you to save a bit of money to cover the increase that you've got coming.
Yeah, just go back onto that side, Maria. So
Yeah.
I suppose, like I said, those are the key facts. So the threshold on what employees are, so there's two impacts. There's the increase from the 13.8% to the 15%. So on that basis, everyone's going to be paying more. But also, like you say, we're also going to be paying this national insurance on a higher figure as employers. So it's sort of like the double impact of that. And of course, there is the increase in the employment allowance, so that has increased. But I think if you've got 4 or 5 employees earning 25,000 to 30,000, that benefit is eroded, and you're in a position where you're losing out. So the impact, like I said at the start on Gravitate, is 18k to our business. So it's significant numbers, and especially with all the other pressures that we're facing, this is why this is important to me. And like I say, I'm here to sort of pass this message on to other people.
Okay. Has anyone got any questions they would like to ask at the moment about salary sacrifice and how it works? No, Sam, I can't see the notebook.
I'm looking at the Q&A.
Any questions come in, yeah, just let me know. Okay.
I'm looking at the Q&A in the chat.
Right. So what we've done here, we've just done, because we actually have a calculator, a salary sacrifice calculator. So if you're interested in finding out how much you can actually save, all I need to know is what your annual salaries are. Don't need any information like employees' names, national insurance, just the annual salaries, and I can calculate for you how much you're actually going to save. So just as an example here, this in the green column, this is the employer saving, yeah, and this is the employer saving, both per year. So you can actually see that somebody on, say, 35,000 a year, an employee, they're saving £115 extra in their pocket. That's what they get extra in their pocket. They've still got exactly the same amount of money going into their pension pot. They're at no disadvantage whatsoever. So you're giving them a slight increase as well by switching over to salary sacrifice. For the employer, you would save £215, 70p a year per employee, yeah, by switching to a salary sacrifice scheme. So depending on how many employees you've got and depending on the different salaries, yeah, and then it works out a huge saving. But even if you are a small company, I mean, at the moment, we are literally doing salary sacrifice all the time. We've got so many calls coming in because it's a way of helping people. A couple of days ago, I was speaking to a company that's only got 6 employees, their savings was just over £1,000. But for a small company to be able to save £1,000 is still a good saving when there isn't a downside, really. The employees are earning a bit more money, cash in their pocket, and the employer, and they still have the same amount going into their pots.
So stay on this one, Maria, again, because I think probably just want to talk through a few bits and we have got some questions. So this example, again, just for, because before doing this presentation and committing to it, I didn't probably know enough. So I've learned more in the process, and I just think, well, obviously what the kind of questions I'd be asking are relevant to you guys as well. So here it says salary sacrifice example, savings per employee on qualified earnings. So there's two different ways you can do your pension. There's total earnings and qualified earnings. So depending on how your pension is set up, there's qualified earnings is basically everything over £620 a month. So some people will have qualified earnings set up, meaning you actually don't, if you pay someone less than £620 a month, then they're not included in the scheme. And then total earnings is when you make the pension contribution on the full amount. So it's just making people aware that there are two different ways. Oh, sorry, I've been corrected. 520. Thank you, Jenny. Sorry. So that's the key thing from the qualifying earnings side, and then going through the options. So, like I say, so here, someone on a 25k salary, the employer saving £140.70, and the employee is saving £775 as well. So, like I say, at every level, there is a saving. Obviously, when you go over the 55, well, when you start earning over £50,000, the employee national insurance drops. So hence, there is a decrease in the saving. So the biggest saving is for those earning, like you say, for full-time people between minimum wage around the 25k mark. Now what it's going to become to the 50k mark, that's the biggest saving. So if you've got loads of employees and they're all earning 50, 60, 70, 80k, it's not they're going to be less inclined to do it, because really the saving sits with you. So what Maria has showed me in the past is, well, what some companies do, they say, okay, you're saving 44 quid, we're going to save 330 quid. They sometimes pass on some of the saving to the clients, and you can do that. So you could say, we will, because if you switch to salary sacrifice, we are able to give you an extra £100 per month in this example, and then, like you say, it's sort of balancing out the saving. So it's very much optional, but like I say, it is you have that decision. You know the total saving, and you can split that saving if you want. It's not unusual, is it, Maria?
No, exactly. It's not. All I've done here when I've put this together is give you the minimum. So this is calculated, as you can see, on 5% employee and 3% employer. So if you've got employees that are decided to put 10% into their pension at the moment, so when you come to speak to them about salary sacrifice and they want to sacrifice 10%, the savings is going to be a lot more for you as well, because how you're actually saving money is on their percentage. It's not the employer percentage. So as I say, if you've got employees and a lot of employees do increase their pensions and they're paying in more and they sacrifice more of their salary, and then you will have more savings because that comes off of your employer national insurance. But as I say, there's lots of ways of doing this. I've only calculated this on qualifying earnings because it is the cheapest option that people go for. But if your scheme, whoever you're with at the moment, is set up and you're paying it on basic pay or on total pay, and then obviously the savings would be more.
So I'm just going to go through a couple of questions on. So David asked, so less than 10 members of staff, what does that mean again? So probably just getting that. Well, I mean, some of these examples will go through it, but again, David, I suppose the answer is maybe go back one, Maria, just to bring that slide up. You can see if you've got 10 members of staff, the employer saving roughly will fall in between the in between the 1,100 if they're all on the lower side of things, up to 3,300 if they're all paid on the higher end of the pay scale. Obviously, you have this calculator that you use internally, Maria. Is that something you share externally, or we just got one of the questions saying, is there an easy to use calculator?
Yeah, we do have a calculator. I can put that on a link. I can send that over to you, Sam, and then you can forward it on. But also, I'm happy to do it for clients. So my contact details you will have my contact details. Any of you want to know any further questions or more personal questions after, and then all you need to do is just email me. We can set up a meeting, but also you can just send me a list of your, so if you've got 20 employees, whatever their annual salary is, and then I can come back to you showing you how much you're going to save, and I can show you it both on qualifying earnings and total pay depending what scheme you're on.
Perfect.
So
Thank you. So that's good. So Lucy's asked, so would the employee put in the usual 5% and an extra 3%? So no, an extra 5%, sorry. So no, essentially what happens is, the way I'm trying to, because I'm having to go through this with my team, is normally you would pay them 100% of their monthly salary, and they would then, of that 100% what you're paying tax on, they would contribute to their pension scheme. What we're saying now is, you're going to, instead of paying them 100% of the salary, you're going to pay them 95% of the salary, and they've sacrificed that 5%, and that goes into the pension. So the same amount goes into the pension. It's just how it goes in, essentially, which changes. And like you say, you can then see from that explanation, if they're no longer being taxed on 100%, then the tax and national insurance they're going to be paying is going to naturally come down, and that's how the benefit comes in. We've got some pay slips coming up that try and set it out, because, like I say, it's a fairly complex area. One question from Vic Brown is about the additional administration. Do you go on to that a bit later, Maria?
Yeah, I do, but basically I just said that there isn't really any additional administration for whoever's running your payroll. Once we've got the salary sacrifice set up, and your team, you're on a salary sacrifice, it's literally a tick box in the payroll software. The change is talking to your employees about it, which I will get onto shortly. That does come up, and it's really quick and easy. It's not a hard process, but it's not lots of admin. It is just literally a tick box. And I will say as well that even if you put this out at the moment to your employees, and say you've got 10 employees, 8 of them say yes, we go on to salary sacrifice, 2 of them don't want to go on to salary sacrifice, they want to stay as they are, you don't have to change the scheme. You've still got one scheme. It's not like you have to run it as 2 schemes. Whoever is running your payroll, whether it is outsourced or in-house or whatever you're doing, they haven't got to upload 2 files. It's a very simple process. So it's just really understanding what salary sacrifice is.
Cool. A question from Jenny Reed is, if there is no downside, why haven't we been in this all along? The fact that there is some downsides, and like I say, I'm not here to sell salary sacrifice. I'm not here to sell Penfold. I'm just here to share knowledge. And so we do have a slide coming on with some downsides. And like I say, I just want to be really clear that there's some bits that impact individuals. Obviously there's like changes to contracts and stuff like that which you have to factor in, so there is some admin from that perspective, but like I say, we'll probably tick those points off further down. Maybe a slightly more complex question, if you can answer that, Maria, and then we'll crack on through a few more slides. Is there still a 100k pay-as-you-earn/NI limit before employers' allowances disallowed?
I've got to say I don't. Can you say that one again, Sam? I didn't quite catch that.
So Mohammed's asked, is there still a 100k pay as you earn / NI limit before employers' allowance is disallowed? But I think you might just need to confirm that question, Mohammed. Are you referring to personal allowance, maybe? It could be personal allowance you're referring to, but let's work through a few more slides. I know a couple more questions have just popped up, but let's get through a few more slides and then hopefully we'll answer some questions. And if not, like I say, we'll go through them.
Okay, so all I've done here is just give you, these are 4 examples that literally over the last sort of 10 days where I've worked with clients switching them over to salary sacrifice. So this was the first one, a hospitality company, 35 employees, 27 to 90,000, their salaries varied from. The employee savings ranged from £60 a year to £280 a year per person, depending on the salary. And the annual saving was, for that company, £9,367.80. They were actually on a qualifying earnings scheme. But if they was on a total pay scheme, they would have saved £13,400. And then this was another accountancy practice with 26 employees. Their salaries range from 12,500 to 56,000, and this was their savings here, 4,200. So even on the smaller companies, there's still good savings. A care home, 34 employees. Their salaries were 23,000 to 69, and I think there, if I remember rightly, I think there was 2 people on sort of over 60. The rest were around the 23,000, sort of 28s, 30s, not much over the 30s. And their savings was £5,150. They were once again qualifying earnings. And then we had renewable energy company. This one was actually total pay they was paying. Their salaries range from 27 to 175,000, and they saved 19,216. So these are really good savings that you can save. On the next slide, what we've done, we've just shown you a couple of, so the first pay slip here, the dummy pay slips, been run through payroll as normal, but you can just see here that the employees aren't saving a lot, but they're still having their 10%, their 8% paid into their pension. The only difference they see when they see it go into their pension, at the moment, they will see that they're paying in 5% and the employer is paying in 3%, total of 8%. When they go on to salary sacrifice, they will just see that their monthly pay is less, but they're earning a bit more. They've got a bit more in their take home, a few pounds extra, but they still see the full amount, but it goes in as an employer contribution. So what we want to do now, I'm just going to run through things to keep in mind with salary sacrifice. So just going back to the start, that salary sacrifice has been around for decades. It isn't anything new. Now, one of the downsides of it was the fact that when it started, for people, employees didn't like it and didn't want to go on it, because what it done, if they was looking for a mortgage or a loan, they'd go to the loan and then they're showing on paper their salary has dropped 5%. So therefore, if they was wanting to get a mortgage or a loan, that money was calculated on the lower percent. But nowadays, this is one of the reasons why now it is most companies are switching over to salary sacrifice schemes, because nowadays the banks know that people are paying in their 5% into the pension, whether they're on salary sacrifice or not. So that's taken into consideration. So most banks will accept a letter from either the employer or the provider just explaining that this is a salary sacrifice scheme, and then the calculations will be calculated on the full amount before the 5% was sacrificed. So that's one of the reasons, because as I say, before salary sacrifice, people used to sacrifice their salary for lots of other benefits that they couldn't really do that. But now, as I say, banks know that people are paying in the 5% into their pension, whether they're on a salary sacrifice or not. The other thing is low income. So if you have got employees who are just on the minimum wage, and by sacrificing their salary, it takes them under that minimum wage, they can't go on to salary sacrifice, because you're not allowed to sacrifice your salary taking you under the minimum wage. But as I say, it doesn't matter. So if you have maybe 2 employees on the minimum wage, and the rest, 20 employees who aren't on minimum wage, it's not going to cause any problem, because you can either you just run the scheme as normal for those 2 employees. They stay on what's called relief at source, just having it taken out of their salary, and then the other employees can go on salary sacrifice. So there isn't any problem at all.
And then the maternity pay one as well.
Yeah, maternity pay, just going to go over. So what this is, once again, another negative, because obviously maternity pay, that is calculated on the sort of, I think it's the last 8 weeks of somebody working. Yeah, so that would mean that the employee would then be disadvantaged, because the statutory maternity pay would be calculated on the lower salary, which they've sacrificed their 5%. So what we suggest then, and most companies agree to, is that they come off a salary sacrifice 3 months before they want to go on to, they're going on to their maternity leave. Their statutory maternity pay is calculated on the full amount, and when they return from maternity leave, they can go back onto salary sacrifice. And the reason this is, you're able to do this now, is because years ago, when people were looking at salary sacrifice, it was a case of changing the whole contract. So it was a lot more work for people to do, and companies didn't want to do it. But now what happens is you have to do an amendment to the contract. So you're not actually renewing everyone's contract. We have the wording that we can send you to send out to the client, that you can use to do the amendment. We also have all the wording to send out to employees, explaining salary sacrifice, that you want to switch over to it. And then also what we offer is to do, so if you're a company, you want to do salary sacrifice, we've got lots of brochures and everything that we send you over explaining it. But if you're still sort of quite unsure, or maybe you want to have us explain it to your employees, then I'm more than happy to set up a meeting like this with the employees, just do a few slides explaining salary sacrifice, the benefits, go through the downsides as well, explaining how we'll get over that, the reasons that you want to change over onto salary sacrifice, and then answer any employees' questions. So we deal with all the work for you on switching over.
Thank you. And just, have you got any more on this side, Maria? Because I just want to chip in if that's all right, unless you've got anything else.
No, that's it. I'm fine now. That's the end of my slides for salary sacrifice. I was just going to talk a bit about Penfold. So if you've got any questions that will come through. Well,
yeah, let's just work through a few. So like, look, there's obviously someone mentioned earlier about the downsides. These are the downsides. So obviously there's you can't. So for us as a company, we have apprentices, we have some staff on minimum wage, so they won't apply. So it will be anyone outside of that who will apply, because well, especially the apprentices who are on the lower side. So it's not applicable to those guys. Like I say, this is the one that I don't want them to be impacted by, and that's, like you say, the mortgages and stuff like that. So I've spoken to a few mortgage advisors, and like you said, they do take it into consideration. That is the one. I'll be honest with my team and say, like, look, you will get a few more quid, but that is this is a key one. But like Maria said, and speaking to mortgage advisors, they're getting more net pay in the bank. They've got more money to pay the mortgage, so it would have to be a full computer says no kind of situation for them not to understand that they're in a better position to pay the mortgage. So it gives me some comfort from that perspective. And then, like you say, when I did post about this event on LinkedIn, some of the questions were about maternity pay and the benefits and stuff. So that, again, it's good that there is solutions in place for those. So then going to Gary's question, so contract issues, obviously anything linked to this is going to be contractual issues, and like Maria said, you have to send out an addendum to the contract essentially. And again, Maria, is that wording you're willing to share with everyone in this group, or is it just clients? How does that
Yeah,
work?
so what we do, obviously, we've done all the work. So I'm going to go on to Penfold and give you some background information on Penfold, because there are sort of a lot of other reasons about switching over your pension to Penfold, and also at the same time implementing salary sacrifice. If you do that, we do basically all the work for you. We've got all the communications, the wording, the brochures. We hold the meetings for you, talking to your staff. So we do everything. As long as you're coming with us, we give everything over to you at no cost whatsoever. So yeah, we have got all that information that you can use, and the process is very simple and easy.
So there's obviously a couple of bits Maria said that she's happy to share. Anything that she's happy to share, I'll get sent round after meeting. And like I say, from our side, we do have a calculator that will say, okay, my national insurance right now is this, based on this number of staff. What will it be come April? And again, that will allow you to get an idea of the impact. So we can share that round. Just taking through a few questions, Teresa. Obviously, hopefully, some of this has answered the sort of the solutions to the problems around mortgage and stuff. But the third option you always do have is to share the benefit with them. So like say, going back to that, like I said, when we worked with Maria, we worked with Penfold, so I'd sent over all our staff's pay and she sent me over the total impact. And then we have a decision to make as business owners, whether we take the benefit and leave them with their benefit, or whether we look at some ways of sharing the benefit to, like you say, encourage people to partake. Then Jenny's got another question. So she says, when you don't have to, so earlier, Maria, you said you don't have to run two schemes for the pension. Is that true for all pension providers? Is it just for people who work with Penfold?
Yeah,
so for example, if they're with...
Yeah, I mean, if you're with other providers, a lot of the feedback that we get, especially with Nest, that salary sacrifice isn't very easy to run through their platform. I don't know all the other providers, how they actually work. Some companies, you may have to upload 2 files. You'll see when I go through the Penfold information shortly, because we are a fintech company and we've built our own platform. We've built our own platform to concentrate on it being simple for employers with their workplace pension scheme. So we've built it so that it's easy to implement salary sacrifice and to actually have a scheme where some people aren't on salary sacrifice and some people are. But I can't really say about all other providers how they work.
Thank you. And then, so we will be sharing the slides. We've mentioned that one. Lucy Sarah said, if a company decides to sign up for salary sacrifice, is it mandatory for all employees, or is it case by case? So what will happen in our example, Lucy, is we will move to a salary sacrifice because, like I say, it makes sense. I think one of the questions is, why aren't we all doing it? I think it's because it's not the standard. I think the standard is the original scheme, but I reckon I expect, this is just a guess, Maria, but large businesses, like 99% of large businesses will be doing it. Is that right? And it's just,
I mean,
it's SMEs where it's a bit like, oh, it sounds a bit awkward, so they don't do it. That's just a guess.
Yeah, I think a lot of the smaller companies maybe been sort of not aware of salary sacrifice, or because in the olden days it wasn't used so much because there were downsides, and obviously things have changed now that it's more popular, and obviously there's huge savings depending on the size of your business. But yeah, I mean, so many people now, and I've got to say, even before this, with the national insurance hike, people are switching over to salary sacrifice, even before this was announced in October, because what's happening now, when auto enrolment started in 2012, most companies did think, oh, most of the employees are going to opt out. It's not going to be very popular, and we're just going to do something that makes us compliant. But nowadays that's changed. The way of thinking has changed. You know, most people are in the workplace pension scheme. And also now it's not only just about a salary. Companies are now wanting to put together better packages, you know, sort of educational for wealth and well-being, etc. So they're looking at ways of different benefits. And a lot of people, we work very closely with insurance companies where, you know, companies are contacting them. They want to bring in whether it's death in service or other benefits. But for them, this is a way, well, we want to bring that insurance in. Where are we going to find that money? We can switch over to a salary sacrifice scheme and we can find some of that money. So it's not only the national insurance hike that is making people look at salary sacrifice. There's lots of other reasons as well.
Okay. And then I accept I didn't actually answer your question, Lucy. So Gravitate, what we're going to do, we're going to roll out the salary sacrifice scheme, and we will offer our existing team. So there are going to be people in our team who won't qualify, apprentices and minimum wage implications. So we'll identify those. We're going to offer them the opportunity. Well, we will put them into a salary sacrifice scheme, and they have the opportunity to opt out and remain as they are. And like you say, and in between that, we're going to do a bit of a more education piece, because I've tried to I've talked it through with the team, but I want someone like Maria, who's an expert, to sit in front of our team and talk them through, like I said, pros and cons to their side. So it's not going to be mandatory for existing staff, but everyone who joins us going forward, as part of their contract, it will state that we are on a salary sacrifice scheme. So and the wording will be correct in the contract, which says your salary will be X, but you will contribute 5% as part of the salary sacrifice scheme, essentially. So do you want to carry on through the rest of the few slides?
Okay, so what I wanted to do now is just give you a bit of background information about Penfold and how we started. So we've been a pension provider since 2018. We have 700 million in assets under administration, and we've got over 100,000 customers with over 2,000 employers using us. We're regulated by the FCA, TPR, HMRC, and obviously with FSCS. That's always a hard to say. Our funds are with BlackRock. Now, BlackRock, which I'm sure you know, one of the largest asset managers in the world. And you will see shortly how our funds are performing against other providers. And just along the bottom on here, you can see these are some really large companies in the UK market that actually got their scheme with Penfold. So why is it better for the employer? Well, for the employer, our pension platform is just really simple and easy to manage. So it's just saving the company money, all the accountants that are using us, hundreds and hundreds of accountants. It's much easier for them to upload the contributions. And then also for the employees, it's an award-winning experience for them. So with us, they do have their members app. And the easiest way of explaining it is just like you have in your bank account online. You download the app on your phone, exactly the same. You have every time money goes into your pension pot, you receive a notification to say X amount is going in. You open up your app, and straight away on the dashboard, you've got your live valuation. You can bring old pots over into one umbrella. So if you've got pensions with People's Pensions Now, Aviva, Nest, you know, some people have got maybe 5 or 6 different pension pots. So when we give the members welcome presentation, we explain about how many pension pots and transferring over, completely free of charge for employees. We have a support team that anytime they've got any questions, they can either come through me, myself, or we have a support team that they can contact. When we're talking to the employees, we explain, because in the UK at the moment, there's £33 billion in lost pensions. And that's where your employees, people like your employees, are working, switching jobs. They forget where their pensions are when they worked in their 20s and 30s. They're reaching retirement and they just forgot all these pensions. So it's really, really important to give pension education to employees. Since 2012, when auto enrolment started, millions and millions more people now are saving into a pension, where I'm sure most of them just think it's called pension and it's a little pot that the money goes in. They don't even understand that it's maybe, being invested in stocks and shares. So when we're actually setting up companies and we're giving these members welcome presentations, we're giving education to your employees, just explaining more about their pension, where their money's going, showing them how to navigate around their platform, how to use it, complete the beneficiaries. We're just doing a lot more for the employees, which then that means you are actually giving your employees a much better pension than just the bog standard paying in and no one knowing where the money's gone to.
Yeah, and like I say, from my perspective, as a business owner, I've got a passion for financial well-being. It's something that's really important to me, and all well-being in general is important to me, and my family. But so obviously, as an accountant, I'm quite passionate about specifically financial well-being. And like I say, so now all of my team out here can literally go on an app and check how much pension they've built up, and it's a real figure. It's no longer just I don't know, a piece of paper you get once a year. So they can see the pension, where the money's invested. They can see, like, every month like a bank account, they get their payment from that they've paid in themselves, and we've got the payment they've put in. And I just think, like I say, it's something that I'm really passionate about, and I'm glad we joined Penfold for that reason, essentially.
Right. So what happens with us? We do have a lifetime default plan. So if you set up a scheme with us, all your employees will go into the default fund. Something like 98% of the population will stay in the default fund. But if you do have employees who understand more about pensions, their funds, we do have options for them to switch. It's done on their members app, and we would show them how to do that. It's really quick and easy to do. We just show them how to navigate around their members app when we give the members welcome presentation. We do also have sustainable funds. So if you do want to set the sustainable fund up as your default fund, you can do that. That is quite unusual with other providers. Most other providers will offer a sustainable option, but most other providers will have an extra charge for that. Now, the only charge that Penfold have is a 0.75% AMC charge to the employees. There are no charges at all to the employer. There's no switching fee, there's no setup fees, there's nothing at all. So the only fee is the 0.75%. Most companies, as I say, for their sustainable would charge more, but with us we don't. So you could either decide to have the whole fund as sustainable, or if the employees want to go in and switch, they can do so. It takes literally a minute for them to do it in their app, and they won't be paying any extra money whatsoever.
And I think that was a question that Vic just asked. So do BlackRock have ethical pension schemes?
Yes,
Our team care deeply about our ethics of the pension schemes, and the schemes are actively managed from an ethics point of view.
Yes, we do. And also we can give you more information about our fund and investment brochure. But also we do have a Sharia fund as well. That fund is with HSBC. That does have a 0.88% AMC charge. But you can see here, not on the Sharia fund, but this slide here is just going through how our funds are performing at the moment. And if I just quickly take you on to the next slide, this slide is done with an independent survey. It's taken over the last 5 years. So it's not over the last 6 months or a year, over 5 years, but you can see here how we are performing much higher than other providers on the market. So you can see if you've got a pension with Now Pensions, yeah, their performance at the moment, they are going through quite a bit of internal changes at the moment. But for the last 5 years, their performance has been 3.6% gross and 3.2% net, compared with us at 8.6 to 7.8. Yeah, and then you can see other big ones like Aviva, obviously 5.4 and 4.9, even Smart Pension. And then some of these with Smart Pension, they have a monthly employer charge. So they're charged £26 a month, just a fee for the employer. I noticed on our internal channel yesterday, we signed up a new client that is with Aviva at the moment, and they are obviously quite a large scheme, but they're having a £10,000 a year charge from Aviva to the employer for compliance. So, you know, there are lots of providers out there that are charging huge amount of fees to the employer. So this is another reason to look at who you're actually with at the moment. It's not just about switching over to salary sacrifice. It's about who you're looking, who your provider is, how are they performing, what are the charges, you know, are they making an employer charge? So there's lots of other different reasons. And then also on top of that, it's actually what you're getting from that provider. You know, as I say, we do offer free of charge all the ongoing as well, financial well-being. And so it's not just when we set you up, you know, when we set you up and I'm talking to you individually, what do you want from your pension provider? What do you want to be able to offer your employees? If you have a few new employees, you know, sort of 10 every quarter, over the quarter, and then we can set up. So part of their onboarding will be able to have a members welcome session, so they understand the pension that you're offering. So all of a sudden that pension has gone from being just your standard run of the mill, we're doing this because we have to be compliant, to offering it as a benefit. Yeah, this is just covering our fees, which I have gone through already. So just to repeat that, we just haven't got any setup fees. We don't have any monthly management charges, no contribution charges, there's no advisor fees. Our one-off fee for the employees is 0.75%. And even with the employees, when they're transferring in and transferring out, there aren't any fees whatsoever. Yeah, we don't make any charges at all for our transfers. So really, that's it. What are the next steps? So as I said before, we can calculate what savings we can help you save. We're switching over onto salary sacrifice. The switching process is very, very simple and easy to do. We do all the heavy lifting. There's not really any work. The information that you do have to send to your employees, we send all that over to you. So all you're going to do is really copy and paste it, add a couple of bits about your company, and then you can just forward that to the employees. We offer full employee support all the way through. And then, as I say, we can do the online welcome presentations, explaining salary sacrifice, explaining more about pensions, etc. to your employees.
Perfect. Thanks, Maria.
So yeah, if there's any other questions.
Just on that one, Maria, just want to just go back one, just say, like I say, probably make sure everyone understands clearly. So for because like I say, so on the call we've got probably a mix of Gravitate clients, we've probably got some non-clients, and we've got probably some other accountants as well who are just learning about salary sacrifice. So from that perspective, we can calculate your savings. Is that something you offer to people on this call, or would you just send out the generic spreadsheet and let them input the information for that?
Yeah, no, I can't send out the spreadsheet, I'm afraid. Yeah, so anyone, it doesn't take me long to do. But all you've got to do, even if you decide not to go with us, I can come back and tell you how much you can save. Once you know exactly how much you can save, if you think, oh yes, we'd like to go further forward, and then we can have a discussion about switching over to Penfold. And then if you do want to go switch over to Penfold and implement salary sacrifice, and then I can send you all the information that you need to be able to do that. And as I say, we will deal with everything for you. We set the scheme up. In most cases, we can close your old schemes as well for you. There are a couple of providers where they won't let anybody, even if you, say for instance, Sam's running your payroll for you. If it was someone like Smart Pension, even Sam couldn't close that. It's got to be from the employer themselves. But I would give you the wording and the email address and everything for you just to forward that email. So it is a very quick and easy process. It doesn't take long to implement. You know, if you want to look at starting this from April, it's really good timing now, because first week in March we can maybe have conversation. If you do want to go ahead, it's just a case of most providers ask for a month's notice to switch provider. And one thing to say, that it is the employer's choice about switching provider. It's the employee's choice whether they want to move their old pot over into their new provider. But moving forward, they have to have the contributions going into the new provider, the one that the employer has chosen. And as I say, we've got all the wording to send over to you to obviously relay this on to your employees.
Thanks, Maria. I know you've answered the question, Jenny, but just to confirm that you, like how it worked with the team here, is when we got Penfold set up, they came on site, and we had the catch ups, and any questions were answered there and then. And like I say, it tended to be problems with pulling their funds from other providers into Penfold, but everyone's sorted now. So like I say, for me in the past, I'm probably not the best example actually, because but for employees who have had 3 or 4 different roles, they were able to combine all the pensions from different providers into one Penfold, and they knew exactly how much they had. So it was nice from that perspective. Is there any more questions, Mohammed? I'm sort of, because I don't completely get it, so it must be being a bit dim. So we'll try one more time, and if not, I'll speak to you offline, and Maria can help. So Maria, Mohammed's question is there still a 100k pay as you earn / NI limit before employers' allowance is disallowed? So before, I think, like I say, someone else has commented, essentially, the restriction has been moved from the 6th of the 4th, 25. So I suppose I'm just waffling a little bit here.
Yeah, the best thing to do, Sam, can you email me that question over?
Yeah.
Let me have a look at it. If I can't answer it, yeah, I will get somebody in our company to answer it, and I can email it back, and then you'll have Mohammed's email address, whatever contact details, and you can answer it. So we'll definitely answer that for you.
Okay.
As I say, I need to have a look at it. It's a bit more, you know, I know, obviously I work for Penfolds. I know about pensions. I know about salary sacrifice. I'm not really au fait so much on pay slips and payroll, etc. But we can get that checked for you.
Perfect. I hope that helps. And Phil might have answered it, but like I say, I just that's the only question we haven't answered. So has anyone got any new questions? Like I say, appreciate it's complex. Phil has answered it, so we're all good. Thanks, Phil.
Okay, excellent.
Sorry, I was just making sure. I kept seeing it, and I was sort of floating around it a little bit. But yeah, any other questions? Like I say, I can give you questions from our experience with Gravitate, and Maria has experience with her clients. From my side, the best place to contact me is LinkedIn. I talk a lot about benefits like this on LinkedIn that I believe in and that I'm implementing at Gravitate. I don't talk about anything that like I say, I wouldn't do at our own firm kind of thing. So yeah, and then Maria, the best way to contact her is
well,
here.
I'm on LinkedIn as well, so you know, you've got my contact details here. But I am also on LinkedIn, so if you want to contact me on LinkedIn, and then obviously I'll be on there. I'll put a comment on one of Sam's posts for this, and then you'll be able to see me also. You can contact me there on LinkedIn as well.
So we'll leave it one more minute for any more questions. If not, like I say, thank you very much. It's the first time we've pulled together one of these. So again, if you've got any feedback for us, feel free to send it over. It's the first time I've done it. Maria sounds like she does quite a lot. But yeah, any feedback is completely welcome. Yeah. And like I say, I hope some people found it useful. Yeah. Yeah. But like I say, we'll hang around for a minute just in case anything pops up. Thank you, Gary.